So to buy the house, that's all you had to pay. That's all I had to pay. It's important to understand real quick income versus expenses. When we talk about income versus expenses, the biggest thing is income is money that's coming into you. Expenses are stuff that you have to pay out. So the money that comes in on a rental property, the income is your rent. So how do you figure out rent? So every time you need to know what something costs, you're going to do what's called comparables. Look at properties to compare your property to, figure out what you can get for your property. So again, if you're looking at properties in this particular area, you're going to do your due diligence to see, okay, this property is like mine. It's finishes, it's fixed up like mine. It's got the same amount of bedrooms, same amount of bathrooms. It's got the same, situation of mechanicals. And then you come up with your base rent. So for me, this is a comparable in that Temple area in the property that we're talking about here on Grad Street. Now, I knew that for a 4-bedroom, the rent on this property would cost $1,900. So if I rented this property, all 4 bedrooms, it would be $1,900. But remember, I did something called house hacking. What that means is I lived in one of those 4 bedrooms, and the other 3 bedrooms I rented out to friends. So the friends paid their portion of that rent, and then I didn't have to pay a living expense, of course. But what I ended up getting out of the situation is I lived for free in one of the rooms, and then I charged these 3 guys rent for living in one of the other rooms. So the total rent that came in from the other 3 bedrooms was $1,425. All right, so let's look at my expenses. Essentially, my mortgage payment is one of the biggest expenses that you have on a property. I'm not going to go too in depth into what this actually costs you or how a mortgage is comprised, but basically you have a certain loan amount, and that's the amount that you borrowed from the bank. Remember that $67,000 that the bank put up for the house? I have to pay them back for 30 years every month. It's that amount. So that's what they're calculating when they come up with a payment that I owe them. So when you look at that, they calculated that my mortgage payment every month I owe them $306. So just for the mortgage I owe them $300. But then a house also has 2 other big expenses: yearly taxes and insurance. So the insurance on this property is $1,172. The taxes on this property is $968. So take those 2 numbers, divide them by 12 because you pay that every single month, and then add that to the amount that I pay for the mortgage. So the amount that you're giving to the mortgage is called your principal and interest. The other 2 amounts are escrows. The total amount that I pay every month for that house is $481. Now, if you care to know the math behind it, your monthly payment is use this formula. We're not talking about that formula. So back to my monthly payment. That's what I pay every month as a mortgage payment, a monthly payment. It includes taxes and insurance. Then, because it's a rental, I recommend that you etch some amount of money out for maintenance. It's not going to all come, obviously, as nicely as 5% every month. However, you may get a bill on one month, but you might have no bills on the other month. So I go 5%, add that to my monthlies. So when I do my calculation of what I'm making every month, the monthly expense that I put out is $576. Now, there's another big kind of elephant in the room about renovations. When you do a property and you're trying to maximize rent, typically that's my formula. I buy crap properties, I fix them up, and I charge top dollar rent for them. You have to calculate in a renovation budget. So depending upon what you're doing and how you're doing it, you can figure out how to calculate renovation dollars. But that also has to get paid for. Either you're paying that out of pocket cash, or you're going to borrow that money and you're going to pay that every month. So for this property, at the time I had this property, I ended up with a construction budget of $27,000. So you can see that construction budget right here, $27,000. Let me shift myself out of the way. Aye. All right, so let's look at, for this particular property, when I talk about construction budget, we're talking about I paid $27,000 to fix this property up. Now, I also took out a loan to pay for the construction budget. So to pay back the $27,000, I paid $300 every month. So remember, my monthly expenses with my mortgage plus my maintenance, $576. My construction loan payment was $300. So everything I had to pay out of pocket was $500 plus this $300. That took me to $886. So every month I owe $886. Now, when we go back to the overall big picture, my rent coming in for this property was $1,400, $1,425 to be exact. So that money comes in monthly for the year. Just so you see the number, it's $17,000 for the year. I had to pay out $886 every month. So if I make $1,400 every month, but I pay out $800 every month, the difference is what's called my net monthly income. That's my cash flow. That's the money that comes into me every single month, is the difference between those two numbers. And that amount is $539. What does that actually mean? That means that I make $539 every single month. I live for free in a property. I have 3 tenants in this property. And with all my money that I owe, I am still making $539 every single month on this particular house. For the year, just multiply that number by 12, I make $6,000. That's one property. So if you really want to nerd out on the metrics, these are some additional numbers to help you understand how you can analyze a property. So again, the cash to buy the house, the money that I put out of my pocket to buy this house was only $2,300. The cash to fix it up was $27,000. So my total investment in this property is $29,595. The cash flow, remember, was $539. So one metric that I use, and this is a metric that I love to analyze properties, is my cash on cash return. So the money I put out, how much do I get back on my money? What's the return on my money? What's the percent return on my money? So this property gave me a 22% return. 20% on your money is ridiculous. If I pay $100 and to get back $20 as a return on that money, that's a lot as a return. For perspective, the stock market gives back about 10%. Which is supposed to be the conservative baseline. That's why I say that. For me, most properties, if it's not 10% or a little bit above, then it's not necessarily a great deal for my cash working for me. Now, this is ridiculous, though. You're not getting 22% on a property, especially not today. Remember, I bought this house a long time ago. But the other ancillary benefits that I get from this property is the fact that I got to live for free. So I lived in this place, which means I don't have a living expense. I'm saving whatever the heck I'd pay for rent or a mortgage. Plus, I get this other residual income. I got the $500 that comes in every month like clockwork, in addition to whatever I do else for work. So for me, this was a really cool thing. Now, in the discussion of other metrics that you might want to look at, so people go through metrics galore when you're talking about property. It depends on who you're talking to, what they covet as the thing to look at. So for me personally, I look at cash flow. I look at my cash on cash return. That's all I really care about. I want to know what I make month to month because I like to use property to replace my income. That's the purpose of why I started buying houses. I wanted to replace my regular income with residual income from my rental properties, and that's what I've done. But these are just some other metrics. You can go do a deep dive, read a book by Grant Cardone or Kiyosaki or Kawasaki. You know that guy, Rich Dad Poor Dad guy. Go ahead and drop that in the comments. But for shits and giggles, I think it's important to see a property that was a little more recent. So this is a property, I don't know if it's recent now when you're watching the video, but this is a property that's purchased in 2022 as an investor. So my cash to close was $45,000 because remember, my down payment has gone up. So I think I paid 25% on this particular property. But when your down payment goes up, that means obviously the cash you need to close is a little bit higher. So $45,000 to close on this property. Cash to fix it up, I spent about $46,000 to fix it up. The total investment that I put into this house was $90,000. Now, the monthly payment on this, based on the mortgage that I had left over, was $1,200. The rent that I make on this property is $2,000. That means the cash flow that I've got on this property is $780. $780 is a really good cash flow for a rental property. On average, I look for $500 as a baseline of what I want as a net cash flow on my properties. The cash on cash return on this is 10.2%. And again, the cash on cash return personally is my primary metric that I look at, that I care about when I decide if I like the property or not. But that's this house, guys. That's the numbers. That's how you break down the numbers of what I made on this house and what I purchased this house for. You can take a deep dive on any of those numbers. You can use those kinds of analysis skills when you're approaching any property. But this was a fantastic buy. It was great that I was living there in house hacking. I recommend anyone getting started, if you're in a position to house hack, I recommend that you try that. It's going to drastically reduce what you pay out in property and for your living obligation, and it is a great way to get into buying property. So whether you do a multifamily or whether you do room rentals like I did, it's a really solid way to get started and not have to pay out as much and kind of gently work your way into rental properties. All right, guys, it's been a Duncan Flip. Take it easy.